Now let's talk more about the markets with an investment analyst at ARM Securities, Usman Olubajo. Thank you very much for joining us, Usman.
Thank you.
Now let's begin with the equities market. We saw a bullish trade yesterday. What would you say was the major driver of that sentiment recorded yesterday? Would it just be an optimism about what the central bank is going to announce today?
Well, I think for the equities market in particular, what you've seen is, like you earlier noted, we've seen 5 consecutive days of gains, which is the first time we have this winning streak in this year, and we believe it reflects a combination of 2 things. First is the fact that so when you look at the drivers over those periods, the sector that has driven the equities market, largely banks, cement, personal care. So for the banks, a number of them posted impressive results, GT, Zenith, Access, and others. Even within that space, we've seen the share price of the companies actually fall to near record lows. So we saw a bit of bargain hunting. But for the rest of the sector, cement, as well as for the broader sector at large, I think what has happened is the fact that there's increased dollar sales at the interbank market, or even which also has filtered into the parallel market. And a number of these companies depend on FX for imports, and there are 2 things. Those companies are divided into 2. One, there are some which depend solely on the CBN for importing, so they depend at whatever rate the CBN gives to them. And there are some who depend more on the parallel market, perhaps because of liquidity issue and the likes. So the CBN has increased dollar sales to, I think, cumulative dollar sales to the market is around $2.26 billion between February and March, and that's more than almost times 2 of what they sold in the prior 4 months combined. And what that has done is, number one, in terms of the liquidity, so those companies have been able to they have increased access to FX, but also those who depend on the parallel market. So at some point this year, FX rate at the parallel market was around 520, and investors more or less like sold down the shares of this company. So FX probably between 435 and 445 right now, and so that's boosted in terms of even the cost of importation of this company. So,
and you will say that is, of course, confidence returning back into the market, perhaps the confidence the companies are finding in the FX market.
Yes. So it's boosting confidence.
No, but then how sustainable is this trend?
Well, I think what you think when you're looking at the sustainability of CBN selling, because I think that's the thing, there's improved supply in the FX market. So, and the major seller is the CBN. So FX reserve has crossed $30 billion, and what has largely driven it has been non-oil revenue. So other official reserve, as well as the swaps the CBN has done with a number of banks and the likes. But also important is the fact that the gains on the oil front is here to filter into the FX reserve. So oil prices has inched higher to probably around $55 at least for most of this year. Production has also improved, but typically there's usually this between 2 to 3 months lag in terms of when the impact is effectually felt. So we think in terms of accretion into the reserve, at least it's likely that the reserve will continue on this trend, and that's positive, because what it means is if CBN has enough reserve, then at least it can continue to sell dollars into the FX market, which automatically is very beneficial for companies, especially the manufacturing companies.
Now, if the oil market's basically doing all right with the oil price, popping up a little bit, and we have the accretion in reserves, how well would you say that the oil companies listed on the exchange is performing?
Well, so the problems with the upstream, so the downstream has not to do with the oil price, but the oil upstreams, the likes of Seplat and Rwanda. Yeah. So apart from the challenges of oil prices, a number of them has also faced the fact that they faced increased damage to their pipelines and the like. So things are started to improve on that front. We've seen reduced amount of attacks on pipelines. So all in all, yeah, it's the outlook is looking positive for the upstream oil and gas.
Okay, now let's look at the debt markets. We saw an upbeat sentiment at the bond segment, and kind of a bearish sentiment at the treasury bills segment. Talk us through the market yesterday. What drove that sentiment? Why did we have those two markets tilting sideways?
So, again, I would like to just tell us like what has happened since the beginning of the year. For the bond market, it started on a so yields went up significantly, especially after the January auction. The federal government raised more than what they planned to raise, and that actually spooked markets. Afterwards, before the February auction, they raised the Eurobond, which boosted the ability, which gave investors confidence with the fact that, okay, the federal government is likely going to raise more of the external borrowings and reduce pressure on the domestic front. So far in the month of March, more or less shaped activities in the fixed income market is the inflation reading that came out. So inflation declined for the first time in 15 months. And what that just says is that perhaps we'll see some form of easing, perhaps at the MPC or further out, but in the near term. And that's more or less driven investors towards the bond instruments. A number of them have increased the purchase of bonds. But for the T-bills, the CBN has maintained its hawkish policy. They did an OMO yesterday. They left rates unchanged. So the 1 year paper is still around 18%.
And there's an auction tomorrow.
And there's a T-bill auction tomorrow. But that is, so the issuance, the amount they're planning to issue is more or less like a rollover. So there's a maturity on Thursday. So they're just trying to raise money to fill that. So, but in essence, what's happened is the fact that investors are looking at the OMO rates in order to price secondary market rates of treasury bills. Okay,
let's quickly look at the MPC decision, of course, which everybody is looking forward to knowing what the CBN has to say. Your organization, ARM, says it's too early to ease. Why?
So there are two things. First is the FX concern. So they are so concerned about the FX, and the CBN has prioritized monetary tightening in order to prevent speculation on the naira. And that is what they still did yesterday. But the second thing is the fact that the inflation reading there's a sense that the month-to-month inflation reading at 1.5% is the highest since the hike in PMS prices in May 2016. So there could also be concerns about the fact that inflation still looks, and there are still some worries and concerns on inflation. We believe the CBN will be more focused on, okay, let's see a steady decline in inflation, and then we'll look towards easing. But what they could do, because when you look at inflation is 17.8%, MPR is 14%. Right now, the MPR looks symbolic. What they could do is the clearing rate at their own auctions, they could try and reduce that, and that would actually signal a form of easing.
Okay, thank you very much, Usman, for your time.
Thank you.
Usman Olubajo, analyst at ARM Securities. We'll take a quick break. When we return, the program continues. To stay with us.